The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen. Merry Christmas to all of you. Welcome to this, our last webinar of 2017. Quite amazing, isn't it? How time has gone so fast. How's the sound, folks? Can you all hear me? If you just, a couple of you type in the question box, let me know that you're getting the sound all right. Great, says Rose. Hello, Rose. Rose is over in Montana. And Gardner as well. Sounds great. Good. Yes, thank you very much. Lovely to have you all here. Daryl, my mate over in Mossman. Good to see you're with us, Daryl. And Kevin Spacey, there's always one. Okay, so wonderful to have you here. And here we are, it's Christmas. I mean, it's hard to believe, isn't it? I've got to say this year has just gone in a blur. I put a little post up on the forum today. Just thinking that we're going to be closed next week for the Christmas holiday, for the Christmas week. You know, we usually try to take off 1 week a quarter. You need a break from the rigors of trading. You need all those domestic chores catch up. You need time to do all of those things. It's also good to have a break. But this year, the trading has just been so fantastic. I haven't been able to tear myself away for it. And every quarter, someone's reminded me, you're going to take your break. And I've sort of said, no, I can't. The trading's too much fun. It really has been a wonderful, wonderful year for trading. Each one gets better and better. This is no different at all. So for that sort of reason, I guess, because we've been so engrossed in, I've been so engrossed in what I'm doing. Hello, Tony DD. Up in Chicago, cold Chicago. When will I be back in town? Probably February, March, Tony. I'm spent the last 2 years working on the great automated trading program, which embarrasses me to say still hasn't come to fruition. Some of that is problems with the software we use. Other parts of it are problems with the people who are doing it for me. But I will have that, hope to have that finished in the by the end of this month, actually. I've got a whole week over Christmas to work on that. And once I've got that, I'll be taking a trip to Chicago to see some brokers. You're on my list, of course, mate. Anyway, and mention not just business, of course. We might do some sailing and drink some cold beer. That's usually what I try to do when I'm traveling. Anyway, yes, so it sort of didn't feel like Christmas this year. I've just been so involved in trading and obsessing about all the new time signals that the years sort of run away. And we didn't put the Christmas tree up this year until 2 days ago, actually. I guess that's sort of what happens as your children get older. You're sort of less focused on that part of it, which is wrong. You know, you should keep your traditions and your joys and keep yourself young in mind, if nowhere else. And Mrs. Needham and my daughter put up the Christmas tree 2 days ago. Best I've ever seen. Goes right to the ceiling. Absolutely decorated with bubbles and baubles and everything we've collected over many, many years. And it's beautiful. And when the lights went on, and our particular version, you put the lights on, it'll play Christmas carols to you. And all of a sudden I thought, oh, crikey, here we are, it's Christmas. And I really got that spirit. So I hope you have as well, folks, because I really do wish you a very, very Merry Christmas and a hugely profitable New Year. We've had a great year's trading. I'm sure next year is going to be absolutely wild. So looking forward to all of that. Okay, let's see what we've got now. For those of you who were new to us, I should point out to you, I'll just go back to the previous page. This scene you see here, this is actually a painting of Daniel, who's after which the Daniel Code is named, because he wrote about it in 640 BC or thereabouts. And this is a very famous painting by Michelangelo, which is on the ceiling of the Sistine Chapel. I've actually had the great privilege of being there and actually seeing this painting, and all of the others are quite marvellous, of course, one of the great wonders of the world. from Michelangelo. And I particularly like this painting because, it shows Daniel as a vigorous, vibrant, strong young man, not as a sort of the grey beards that we often associate with biblical figures. And we've used this painting as our sort of theme ever since we started this website in 2008. So the years are rolling by. Excuse me. Okay, let's move on, folks. Lots to talk about today. This is the next slide. Those of you with us know this. Markets are rational, orderly, sometimes predictable. And the Daniel codes are a set of proprietary ratios that control time and price in all markets. And it's this aspect of time that's been so important to us this year. But let's go back when I was looking at putting together the 2007 Christmas webinar. I went to the 2016 year, and I found a couple of these slides which you've seen before. And I thought, how extraordinary that how little's actually changed. This is what we were saying at the end of 2016. Brexit was a shock. We lost Cameron and got Boris and Mrs. May. Well, we've still got Mrs. May and Boris, although it's certainly going off the rails in Britain. We've got same situation in Britain that you have in America, that the loyal, sarcastic expression, that the loyal opposition, who are anything but loyal, in Britain, the loyal opposition are actually the government. Very opposed to Brexit, didn't support it, and are doing their best to water it down and weaken it against the wishes of the people, which is much the same thing as you've had in America, that the biggest opposition to Trump has actually been the establishment Republican Party. It's interesting how these things sort of go on and on. Lots of Hollywood celebrities excited us by promising to leave the US if Trump won. Unfortunately, none of them have left, but there we are. We live in hope. And talking about hope and hopey, changey things, this is also from the 2016 webinar. Michelle says we're living without hope. Democrats can't understand the reason Hillary lost was Trump. Democrats behaving like spoiled children. Well, most politicians do that, I guess. And Trump says we have lots of hope. Hope is a Christian concept we get from the Gospels, and I am always full of hope. That's from your 2016 webinar, as is this. And I just wanted to draw your attention to the point towards the end of this screen. Little news is true. Pensions and budgets, the big lie. I think there are going to be enormous problems in 2018 with government pensions. We know there are huge problems already. The mainstream media totally avoids the issue, but there are going to have to be the kick the can on underfunded pensions can't go on and on forever. Eventually, there's going to have to be some decisions made. You can't go on pretending that when you're underfunding 2 and 3% a year, because the failure to meet targets compounds in the same way as overachievement compounds, and the problem basically just gets worse and worse. I think 2018 is going to be a very, very big year for trying to fix pensions. Now, of course, they can't fix them. There's probably not enough money in the system to fix them, but they're going to have to have a serious go at it, which is going to mean much higher taxes for those states and counties which have got pension problems, which is most of them. And it's other thing we wrote this from last year as well, budgets are the big lie. Well, you wait till you see what happens with this wonderful tax cut that Trump's brought in. It all works on the basis that maybe there is so much economic activity stimulated by it that you'll get growth in the economy through trickle-down economics. So far as I know, trickle-down economics has never worked so far. When you give benefits to the big boys and the big companies, they take those benefits, say thank you, optimize them, screw them up for all they're worth, and everyone else gets very little. I think that the shelf life of the new tax bill just passed in America is going to be reasonably short. It might run through the whole of next year. But I think it comes back to bite, particularly this idea that to meet budget requirements, a lot of these tax reduction provisions are due to expire in the future, which of course they're never going to. Once the public have a benefit of anything, there's no good saying it's temporary, because they view any benefit as theirs as of right. You try to stop those benefits at a later stage, there's a scream. You're taking it away from us. These were the best guesses I had for 2017. Not many of which were actually any good. Markets fluctuate, sometimes violently. That's the safe one if anyone asks you to estimate what markets are going to do next year. And that's not original. That's actually a JP Morgan quote from about 4 or 5 years ago. It still seems very valid to me. The S&P did find 2,400 plus, and other equities made fresh highs. We haven't had the V-shaped top yet, and we certainly haven't had any correction. Cable, Aussie dollar, best shorts. Aussie dollar was a good short later on in the year. British pound pretty much went sideways. Gold market didn't make new lows. It's traded in its range. Canadian dollar. An awful lot of feeling against the new administration in Canada. Very interesting. I guess we'll see what happens with that with NAFTA. And finally, I was saying last year, and I'm saying again this year, natural gas is the big winner. Natural gas is very repressed in the States because of local laws that it's not available for export. Natural gas in the rest of the world, Australia is about very close to becoming the biggest natural gas exporter in the world. And in fact, the corporations who own the business and own the government's view of the business have done such a marvelous job that there's pretty real natural gas shortages for power and heating and what have you in Australia. And natural gas is on the international market is trading at about 4 times the domestic market in the US. That's something to keep an eye on, because if it gets to the stage that the US government's willing to allow commercial exports of natural gas, you're going to have a huge price differential there. Something I don't know offhand. I should know, but I know it's about $14 in Japan today. Very different to domestic prices in the US, which of course is the futures market. Here's the best guesses for 2018. You already know that my record as a viewer of the future is pretty grim. But this is basically what I think is going to happen. I think Trump's medicine for the US is actually going to work, at least in the short term, which would be 2018, certainly short term. We know equities have to have a big correction, but I'm not in the crash school at all. I think it's possible to have a big shallow correction over many months and then go higher. I've got the idea that the US dollar index is going to make new highs near 114. Now, that's fairly strange because the US dollar index is almost totally controlled by US Treasury one way or the other. And it has been policy of this administration to get the US dollar down, make it weaker, which makes exports much more valuable, helps the farming sector and other exporters. Aussie dollar, I think this is going to be another great short this year. We've had the most incredible property boom in this country you can possibly envisage. We've actually had 52 years of a non-stop property boom, the longest property boom in the world, and in price it's second only to the mania that's been going on in Sweden. The average price of a property in the city of Sydney, our biggest city, is now over $1 million. That I know is very, very hard to believe. And if you saw what you get for $1 million, honestly, you'd fall over laughing. But we've had this incredible property boom, boosted by very low interest rates and very, very significant tax breaks, all underwritten by the various state governments pushing incentives at first home buyers. In some states in Australia, first home buyers are eligible for $25,000 grant, non-taxable, from the state government. So you feed the bottom up, make interest rates really, really low at the top end. They're not low by international standards. I mean, normal mortgages here are 4.6, 4.8%. Some a touch over 5, but in terms of Australians' traditional interest rates, that's low because Australia is a net buyer of capital. It needs capital for all of its infrastructure and what have you. It's been a huge borrower on international markets. So we've had this absolutely incredible property boom, and I think that collapses. And I think it collapses for the same reason that most markets collapse. There comes a point, with assets at least, where there's simply not enough people who can afford it. It doesn't take much, maybe a rise in unemployment, maybe a rise of a little bit of interest rates, we could really see a real smack there. Euro, I think, becomes the best short of 2018. There's an absolute catastrophe going on over in Europe. Merkel's open borders bringing 1 million unknown, undocumented refugees from Africa, Middle Asia, Afghanistan, all the usual suspects, and they run riot. Lovely countries like Sweden are now got rape crisis, terrible things happening. Merkel's trying to put together a coalition now, finding that her major partner is no longer willing to be in it. So I think Angela's got to go, the lovely Angela. I think she's got to go. She's been Europe's de facto ruler for many years. Coffee, I think coffee defies the laws of supply and demand to make new lows. I mean, I guess we're all drinking more coffee than we ever have. I can't intrinsically understand how the price of coffee goes down, but it does. Maybe wheat finally finds a base and makes a meaningful rally. Wheat and the grains have been terribly, terribly weak all year. Copper's been a big standout trader for us this year. We've had 2 or 3 significantly big runs, multi-day runs, a lot of money, and they often refer to copper as Dr. Copper. He's old-fashioned sort of ideas that copper's a bit of a bellwether of how markets are going, how the economy's going. Copper's been making a couple of decent sorts of rallies. Maybe folks are all feeling better about the economy. I think for 2018, I think the US economy is strong. I'm sure all this pump priming from these new tax arrangements in America has got to just keep that economy firing for a while. I think the UK, Australia, Canada, and Europe have got serious, serious problems that all of those governments have failed to deal with. In UK, it's the Brexit issue where the leaders of the government are really anti-Brexiteers. They're trying to arrange a soft Brexit, as it's called. There's real problems with that. Australia's got its property boom that I think explodes in 2018. Very, very susceptible, Canada and Australia, to mineral prices. We see downturns in mineral prices. Both those countries are very vulnerable. Australia has a almost out of control immigration policy as well, which it's taking no steps to curb. And I think Europe, there's incredible tensions there. The EU is using what they call the nuclear option against Poland. Poland's fighting back by saying the EU is interfering in domestic politics. And that's just a feel for the sort of splintering that's going on, not just with Poland, another number of other countries as well. And that's all based around this out-of-control immigration that Merkel allowed to happen, in fact, invited it to happen. And she's now trying to force homes for these migrants into all of the other countries that make up the EU. And a whole lot of them are saying, no, you won't, not having it. The other big sleeping issue is that the European Central Bank has been very wishy-washy, totally weak under Draghi, totally useless, other than just propping up everything and everyone. You know the old story. He who defends everything defends nothing. And that's what the European Central Bank's been like recently. But the chairmanship of the European Central Bank very shortly rotates to Germany. and the Germans are an entirely different breed. They are rational, they understand markets, and they are very likely to put some backbone in the EU Central Bank. Should they do that, there will be some catastrophes. And my guess is they hit sooner rather than later in 2018. This next page, folks, is a little change for you now. A little testimonial that one of my students sent me this morning. This is a Canadian gentleman called Dean. I've known him for a long time. He actually came to a very early Daniel Code tutorial, maybe as early as 2009, 2010, something like that. And he came back recently to Daniel Code. He's been out of trading for a long time. He's been a trader for many, many years, knows all about markets. He's a full book on it. And asked to do the Daniel Code DC time trading video series, which he's in the process of running through now. And he wrote me this lovely reference, which you can read. And this is a guy who's been trading for many, many years. He says, this is by far the best way to trade and make and keep money I've ever seen or heard of. And he goes on to say, this is unlike anything I've ever seen or even dreamt is possible. The point about trading Daniel Code time is it is, in my mind, I've been in this business for 30 years, it's the only significantly new thing I've ever seen that is not standing on the shoulders of something else. In other words, it's a total standalone method of trading, and the results that our students are getting are quite extraordinary. In fact, I don't tell new students what sort of returns they can expect, because it depends on their own application to a degree, but it is so outstanding, or even if you like outlandish, that the only way to believe it is to do it for yourself. And the results these people are getting is quite extraordinary. So Dean, thank you for that. I know you're here with us today. And I really appreciate that. It's a lovely, lovely testimonial. Okay, as I said, trading time for me has been the biggest deal of 2017. And we've been using these one-on-one video tutorials to teach you everything you need to know to be an elite trader. As I say, it's a bigger change in trading methodology I have seen in the 30 years I've been involved in the business. And trading time, you never miss a turn. Quite literally, I know that's a big statement. You never miss a turn once you know how to do it. But these video sessions was interesting talking to Dean, who came to one of our live sessions at Colorado Springs many years ago. And I remember Dean and Dan, who was his mate, who was there with him. We haven't seen Dan for a long time, but they couldn't really make the Daniel Code work from those sessions. And I've seen that with the live trading sessions. There's always one or two people with a big voice, and usually they're the ones who know least, but they tend to dominate the sessions. And the people who are not so assertive tend not to say much. They get a bit overawed. And then I move on to the next subject, and perhaps not all of it's gone in. With the video tutorials, we videotape each of the sessions that I have with you. It's all one-on-one, and they're there for you to replay as often as you like. And people go through these again and again and again, and many students say, "Oh, I went through that for about the fifth time, and wow, I picked up something new." We've had these paper trading results here. Of course, paper trading is not real trading. You have to allow for slippage. You have to allow for commissions. But you can see that the results they've been getting are such that I don't think, I put it to people this way. I have never actually heard anyone else say that these sorts of results are possible from trading futures contracts. These ones I've quoted to you from Dean. Gold and crude oil are one contract. Bean oil, I think, was two contracts, but quite extraordinary. And this year I've taught time trading less than 20 people, ranging from total novices. I had people this year who've never seen a trading chart, and we had to put in extra hours to show them what the dash on the left of the bar is and the dash on the right is, and what are true highs and true lows. A lot of very basic stuff. So it's gone all the way from that to people who've been pretty good traders for a long time, but really want to go to that next elite level. I've managed to teach less than 20. I want to increase that. Next year I'm going to try and get through 50 students, but that'll be it, absolutely it. The time involved in doing these tutorials and working with clients is so much that I can't take on any more than that. So if you're interested, make your bookings now. Shoot me an email. Let me know when you'd like to start, and get on the list, because it's not unlimited. And I then go on to say that this course is rare and precious. We don't advertise it anywhere. So you have to find us, and then you have to be prepared to put your financial future in the hands of Daniel's words in the Bible, written 2,600 years ago. So it's some challenge. I understand that, but those who've done it are thrilled with it. It works on all markets, in all time frames. I was talking to Chris from Indiana yesterday. He was telling me he's taken this through about 35 markets, and as he says, it never fails. So those of you who are interested in really making 2018 the year you become great traders, let me know. Okay, let's take a look at some charts. This is US T-bonds. This is a 20-year chart. This goes back to 1998, so it's a 19-year chart, really. I have got a bit more. I've got a lot more data than this on it. As you can see, this is quite extraordinary. The whole of this time, from 2000 up until the highs in October 2016, this market's run almost perfectly up a Daniel Code trading channel. It's quite extraordinary. We had a 59 cycle top at that date in September, I think it was, 2016, and the markets dropped down trying to find support. We have another time cycle coming up in about 2.5 months, March, 3 months, early March. I think that this chart makes new lows. Now remember, this is the future chart. So actual interest rates are the inverse of this. So when this chart goes up, it means interest rates are going down. When this chart goes down, interest rates are going up. I know the Fed's been jawboning about it. You can see an arrow on this chart way back in 2015 with the Fed's announcement they were going to raise rates. The market just said phooey. It kept going up. This is a 24-day chart, incidentally, so this is the Daniel Code equivalent, if you like, of a monthly chart, and the market just said phooey, and it went up, 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 and kept going up, until it found its Daniel Code time cycle, which stopped the rally. So in this market's going down in futures means interest rates going up. I can't imagine. I know it's the the US government's policy to keep the US dollar weak and to keep interest rates really, really low. I just wonder what sort of disruption it's going to take to the US financial system if there's significant repatriation of all of these massive, massive billions and billions of dollars of profits held overseas by American companies. My read of this is that we are heading for higher interest rates. Okay, now incidentally, my opinion about what long-term charts do is totally meaningless. All you need to do as a trader is you can't trade long-term charts anyway. The risk is too great. These bars that amalgamate 6, 12, 24 days, all of those are way outside your risk level. This has really been the amazing story of 2017 is US equities, and it's quite extraordinary. And I've got another chart to show you a slightly different version of this, but you'll remember we talked about a 2400 odd high. It got there, it held for a couple of weeks, then burst and burst. It's over 2685 now. This is the S&P. And if you look at the angle of this, this is looking very much like what old-time traders would call a blow-off top. But the interesting thing is, even though it's very dramatic, it's even more dramatic on the Dow, it's actually not that much faster angle than we've seen in this whole recovery. Since, the little retracement in 2011, this market's been on a very, very steep trajectory. Let's have a look at this. This is gold. I know you're all interested in gold. All you gold bugs, hang around. Don't leave early, because I want to show you the weekly chart on my computer. It's quite extraordinary. Tony D is going to do a time trading session. Good on you. Tony, just shoot me an email, my friend, and we'll correspond. I'll send you the documents, get you set up. And start in March or April, be grand. Plenty of time to do that for you. Okay, you gold bugs, I know we have plenty of gold bugs at the Daniel Code. Please hold on, because I want to show you the weekly chart of gold on my computer, which I'll do when I finish this PowerPoint presentation. My guess is that gold's got another leg down. Gold's actually held on remarkably well. It's been strong. It's bounced between its support and resistance all year. Well, a couple of years now, hasn't it? But I suspect it has one more leg down. We'll see if that happens. This is the chart I wanted to show you, folks. This is the Dow. The blue lines running diagonally across the page are standard deviations from the mean. The thicker blue line of those little lines is the mean of that whole chart from the 2009 crash lows in the Dow. And you can count the lines above it, 1, 2, 3. This market is trying to break through 3 standard deviations from the mean. And that is extraordinary. On a long-term chart, I can't actually tell you I've ever seen this in a major market before. This is overbought times whatever you like. Interesting article by Stockman in Zero Hedge during the week, stripping out profits from the Russell and then offsetting the funds that have been borrowed. These dividend-paying stocks. Dividend-paying stocks in the Russell are trading at 107 times peak earnings. Absolutely extraordinary, isn't it? And this is the Dow, which has been the strongest of all of them. In this particular chart, you can see that real blow-off top since about I guess it's February 2016. This is the Trump rally, no doubt about that, and it's just got stronger and stronger. But you're not going to see a market that can run at a major market that can run at 3 standard deviations from the mean. You will see it occasionally in blow-off tops in commodities. But I've never seen a major market at this sort of price level. So 24,900 was this last price level here. There's more above it, of course, plenty more. But I think this there might be an element of buy the rumor, sell the news in this whole tax package, which has been driving this rally. We'll see, but we need a correction, but we don't have to have a crash. I'm not in that school. I think there's so much strength in the U.S. economy that with what's going to happen in the short term, the next 12, 18 months from this tax legislation, I think we could see a long, shallow correction, a long, shallow, largely sideways correction. I think that's probably a better bet. I know everyone likes to get excited and talk about crashes and what have you. Look, they don't happen very often. When they do, we'll be on them anyway. We'll be short before the rest of the world if it's necessary. You can be sure of that. But I just think there's so much strength in the U.S. economy and the pump priming that's going to come through. The natural enthusiasm, it's been bottled up, it's been repressed for so long. The natural enthusiasm from U.S. businesses and the massive unheralded amounts of liquidity. I know central banks reserves talking about tightening liquidity. Not in any meaningful way, folks. Be sure of that. There's not going to be any credit crunch in America. not by design anyway. Okay, the last tutorial the last webinar, I should say, a fortnight ago, I talked to you about major trend changes and the trend changes that give rise to fast moves. This is oil. This is a chart that I just updated on the weekend, and I kept it to show you. Of these trend turns, go to the previous webinar. It's called Super Trends and How to Find Them if you missed it. Look at that methodology for finding these trend turns. And this is running from December the 16th to date. And there's actually only been one full signal there, which actually was a great trading opportunity. If you look at that retracement, this is the July 17 retracement of that swing. It went exactly to the Daniel code 59, I think that was. Very nice trading, but it was a failure in terms of giving us a trend signal. But we're looking at 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 signals, of which 11 have worked. So it's a methodology that's worth focusing on, and you can see that from the previous webinar here. Okay, this is a time trading chart in copper. Those of you who haven't seen a time chart before, this is what it finishes up looking like. What I've said to you when trading time is you will never miss a turn, and that's a fact that's extraordinary. I'm, still not sure myself after all these years why it is so, but if you decide to do a tutorial, I'll show you where it comes from, and you can decide for yourself why it is so. But the proof of the pudding is in the eating. We now have, 30 or 40 people who've learned how to trade time, and they are all just doing fabulously. Okay, let's go on. If you're interested in becoming a super trader, learning about trading time, email me, please, jneedham@thedanielcode.com, jneedham@thedanielcode.com. Send me your phone number and country and location so I can work out your time zone, and I'll be happy to call you on the phone and have a chat to you. And I've taught people from never seen a chart. Two of our very best traders, Sister Sage and Frank DB, who does a lot of the work on the fourth and fifth seal stuff. They were both people who came to me, they'd never seen a chart. Sister Sage said, never seen one, not interested in seeing them, just teach me what I need to know. And they're amongst two of the very best traders we have. And the other hand, we've had people who've prop traders, been trading. Mike the dentist in Chicago was one. He's been trading for many years, very, very keen trader. Came and did a DC tutorial and multiplied his return by 5. So I can teach anyone. You need determination and dedication. The rest I supply. So you also do need some capital. You've got to be realistic about this. The tutorial is quite expensive. My fee is $7,500 US at the moment. I'll give you some terms to pay that if it helps you, but you also need some capital to fund a trading account in due course when we release you to go attack the market. So you do need availability to get your hands on some capital as well. But if you're keen, I'm happy to teach you. Shoot me an email and we'll do that. Free trials, those of you, if you haven't already had a free trial, you're most welcome to have a free trial of the Daniel Code and everything that's in it. Just follow the prompts on the Daniel Code website. Any problems, contact Terry at support@thedanielcode.com. For those of you who might be new to trading, we can also arrange a free trial of Genesis Trade Navigator software for you as well. There are partners. Okay, here's a compliance statement. Always want you to read that. If you don't know how to trade, you're going to get burnt. Do learn to trade. Do take trading very seriously, and be aware that trading has substantial risks of loss. And if you don't know how to trade, they're really substantial, believe me. Okay, this is Christmas. Mrs. Needham, my children, Terry, and his family. Some of you know Terry, who runs our office in Canada. Everyone joins me in wishing you a very Merry Christmas and a prosperous New Year. And if you get your time trading right, I can guarantee you it's going to be prosperous. Let's have a look at this gold chart. I thought this was like a piece of wow. Have a look at this. You've all seen this. You should be able to see it now. I show you this chart on and off during the year, and I'll just highlight to you how perfectly perfect gold is as a trading vehicle. It's a weird thing to say because in many ways gold is a very disrupted market. By that I mean when I'm talking to people, I say don't get focused on one market. People who typically just trade one market get awfully focused. They have a losing trade, they fret over it, they stress over it, they try to design rules to avoid that particular loss. Then the same thing happens. They design another set of rules. Eventually, they design themselves out of trading altogether. That's because they don't really know how to trade. But when we talk about markets, I define them as public markets and commercial markets. Public markets are the ones that attract a whole lot of public involvement, that get a lot of print commentary about them, a lot of experts, a lot of websites promoting them, and gold and US equities, particularly the S&P E-mini, are the two most disrupted websites, two most disrupted markets by commentary. And the S&P is a very poor trading market when it's doing this up, little up, counter trend, little up, counter trend. That's not a good trading market. Gold, by total au contraire, is a wonderful trading market. But I want to show you a little bit about how the Daniel Code picked this high that you can see here, and it's this high right here, which came. This is a weekly chart. This is unusual. Gold's the only market I keep a weekly chart for. All other markets we keep daily charts, 6-day, 12-day, and 24-day charts. But gold I also keep a weekly chart because it just, for some reason, works so well on the weekly chart. It's the only market we keep a weekly chart for. And if you look at this high in September of this year, you can see, first of all, a red line going across left to right, a diagonal line. That's a fifth seal line, and it picked that high all the way back in October, late September, early October 2016. Quite extraordinary. And I wanted to particularly point out to you the time cycles. What we say is where we have we say when time and price are squared, a turn is almost inevitable. What that means is where we have time at a known Daniel Code ratio and price at a known Daniel Code ratio, a turn is almost inevitable. Now, this is not Gann 1 by 1, 3 by 1 stuff. None of that. This is simply a known Daniel Code ratio. And you can see on this close here, right here, this is the close of the weekly chart on Friday, September the 8th, excuse me, 2017. That bar closed at 1351. The Daniel Code black line was 1349.6. That's 14 ticks difference. In a number like 1349, there's actually 13,000 ticks. So it's just a fraction outside 0.1%, like a hair. That's a bit outside, it's a couple of ticks outside what we'd normally allow in terms of accuracy. We expect these markets to find the Daniel Code numbers at either a bar high low or on the close within 0.1%. And that would have allowed 13.5 ticks. We had 14. But this is a weekly chart. It's not quite as accurate as the 6-day chart, but very close. So right at that point, you had price. We had a known excuse me, talking too long. Have a sip of something nice here. It's Friday, incidentally, folks, down under here in Australia. It's 12 o'clock, 12:15 midday, beautiful sunny day, summer. Sun is shining. The ocean is blue, the Pacific right here outside me. And it's just a beautiful, beautiful day. Anyway, we had price. So we had a close at the black line, close enough to the black line to say that's recognition of price. All of this is much more accurate on a daily chart, but it's more powerful on the time chart. Look what we've got here. We started to run one of our time ratios. The time ratios, the major time ratios, are 44, 59, 62, and 70. If you haven't done it already, go to the Daniel Code website, and right at the top of that, you'll see, let me show you where. Hope I can do all this without destroying what's happening. Go up here to articles. Click on that link there, and you'll see 80 or 90 articles that I've had published over the years. I used to write a lot. I don't do it much now, but I used to do a lot. And have a look at these two masterclass articles. This one's called Masterclass, it's about time. And this one here is called Masterclass 2, Timing Gold. And if you read those, you will understand these timing indicators. They're all about timing, market timing. So we start off with one of our Daniel Code time cycles running from this date back here, May the 6th, 2016, and this is a high before the high. And that gives us this low at 44. Could have also given you that high because these signals are accurate to plus or minus 1 period. Then we got the 59 cycle, got nothing for that. Then we got the 62 cycle. Traditionally, the 62 cycle gives you lows, which this did beautifully. Up into the 70 cycle, which we call the heathen cycle. There's actually nothing heathen about it. It comes from the book of Daniel, like everything else that we do, but it comes from a different part of the book of Daniel. So we distinguish it by calling it the heathen cycle. 70 gave you that top right on the dish. Then have a look at this. From this high, okay, this is a high after the high. It's not a place you start a Daniel Code 4th or 5th seal from, but certainly valid. It's more than one standard deviation from the mean, which means it's valid to start your time count from. Have a look what this gave you. 44, the cycle for gold. That whole article is about 44 being the dominant cycle for gold. That gave you the high as well. So you had a 44 from a low and a 70 from a high, both hitting that point, that date, and you also had price. So that's when we say when you have time and price at known Daniel Code ratios, or as we say, time and price are squared, a turn is almost inevitable. And I thought that was really fascinating to explain that to you, just to see how accurate gold is as a trading market. Technically, gold is very, very good as a technical market. Those of you who've done a tutorial with me know that I usually spend a good lot of time teaching you on a gold chart. So it's really worth seeing. Okay, I think that probably brings us to the end of this session, folks. Markets are very, very slow at the moment. Yesterday, or today for you folks in America, my yesterday, your Thursday, almost all the futures markets, the Forex markets, I should say, made inside bars or outside bars. Hello, Mike. Good to see you here with us, old mate. I want to talk to you soon. Terrific to have you with us. Mike's doing a tutorial. Markets have got very, very slow. They're getting very thin. So it's time to start packing up, thinking about your Christmas break. So I do really urge you, take some time off in this next week. Enjoy your Christmas. Enjoy your family. Enjoy your downtime. Rest. Relax. Come back ready for the fight in a week's time when we start again the new year. Because what's not BTC, Peter? I don't get that. Not BTC. Tell me. Peter. Not BTC. Oh, not Bitcoin. No. Oh, crikey. I nearly put that in as what's going to happen in 2018. Bitcoin's going to hurt a lot of people. That's crazy. I see Trade Navigators flogging data for Bitcoin. Here we are from Bill. What have we got? My FX book market correlation on a monthly basis, 94% correlation between Euro USD and Aussie USD. Boy, in that case, look out below, because the Aussie's going to have a thumping next year, I think. Wow. Kevin, do I know a good lawyer? Well, I'm a lawyer, but I certainly wouldn't hold myself forward as a good lawyer, and I've been retired for 20 years, from the law at least, but I guess that's Kevin's problem right now. Excuse me. Anyway, folks, excuse me, enjoy your break. Thank you so much for being with me all year. It's been wonderful to have you with us. Peter's been trading at intraday Bitcoin, pennies from heaven while it lasts. Yeah, well done, mate. Make sure you've got some stops on somewhere. Wonderful, exciting stuff. I get enough excitement out of our own markets. We might have to look at Bitcoin when it gets a bit of a market base, but I doubt it. I have so many other markets that excite the hell out of me. But never say never, folks. If it gets some sort of stability and trading history, we'll certainly be interesting to see if the Daniel Code ratios control the uncontrollable. And the answer is probably. Akshay, thank you, my friend. Happy Christmas to you. Manish, happy birthday, happy Christmas to you in India. Manish has just done a tutorial. We need to have a talk in the new year. Road, do you think it'll be a new low or near the low in gold? Have to give that a bit more thought, Rose. I haven't got a daily chart. I mean, you're getting a little bounce now on the weekly, but I actually think rose gold can go a bit lower. Justin, thank you to you and your family, my friend, and Mark as well. All of you sending me good wishes. Have a wonderful Christmas, folks. Get some rest. 2018 is going to be wild. We'll be all over it, as we always are. And thank you again for being with us. All the best for Christmas. Have a wonderful new year. Dean, thank you. It's been a great couple of weeks for you. It's been a marvelous couple of weeks for me also. Pleasure talking to you again. All the best, folks. God bless. Have a wonderful time. Bye-bye.